It's almost the beginning of September 2023, and our Arizona housing inventory is increasing in numbers weekly. In this video, we'll share the reasons that's a good thing and potentially a bad thing. Before we show you the crazy numbers, be sure and hit that like and subscribe button and tap that notification bell so you get the latest info we share. We love everyone who calls, texts, and emails for more information, so reach out anytime so we can help you too. After over 30 years in the industry, we have vetted real estate agents nationwide to help you buy or sell your next home. So take a look at these crazy good housing market headlines from 2005. The start of each year is prime time for economic pessimists who try to persuade us terrible things are about to happen. A perennial favorite is the housing bubble is about to burst, with a supposedly devastating impact on household wealth. This has been repeatedly recycled since June 2002 by bearish economic forecasters like Ed Limmer of University of California, Los Angeles, and Stephen Roach of Morgan Stanley. The article was written January 9th, 2005 by Alan Reynolds. Oh, this is really good. Those who postulate a nationwide collapse in home prices comparable to the drop in tech stocks claim interest rates will soar because the dollar will fall. Or quite inconsistently, they say interest rates must rise to keep the dollar from falling. It's kind of what's happening right now. Or they say foreigners will demand higher interest rates, trying to demand a higher interest rate from your local bank. Kind of what's happening. Anyway, the only half plausible reason to forecast a big boost in mortgage rates would be the expectation of a large rise in inflation. Kind of what's going on right now. But inflation would certainly not discourage speculation in housing. Inflation is terrific for tangible assets such as real estate, yet horrible for stocks and bonds. In short, we are asked to worry about something that has never happened for reasons still to be coherently explained. And this is written September 26, 2006, so a year later. Is the real estate market in bubble trouble? You can't go anywhere without hearing people talk about the real estate bubble. Such talk drives me to distraction. This is by Kendra Todd. Bubbles are for bathtubs. Despite 1,000 articles in Sunday newspaper real estate sections, the bubble is a myth. This is an article from February 22, 2007 by Bill Tanzer in the Time magazine. So, since early 2000, economics have been sounding the housing bubble alarm with increasing urgency. And while many markets around the country have seen price drops in the last year, the dire across-the-board correction that many predicted has yet to materialize. It says our real estate search and browsing patterns provide a window into the minds of buyers and sellers and offer more than a glimpse of their feelings about the current market. Take, for example, the simple search for housing bubble. As bad news continues to build around the housing market, you would expect that housing bubble searches would be nearing a crescendo. Actually, the opposite is true. People were starting to get concerned with a bubble. At 2006, we were selling homes. We were not fixing and flipping anymore. I was working, reviewing appraisals, and just starting to see an increase in supply of homes on the market. And then because there was an increase in foreclosures, which jumped 81% in 2008, it got everybody off guard. And so all of a sudden now people were putting their house on the market and chasing down the prices. Then more speculators, instead of wholesaling and fixing and flipping, they wanted to sell those rentals and sell those places really quick. So you have to look at unemployment and you have to look at increase in supply and demand. So in Arizona in 2023, we have low inventory, but let's look at the supply that's increasing. So this is a Cromford report, which is data from the multiple listing service, which is the most recent weekly inventory. There's more listings coming on the market every week, which we usually have more listings in the fall and winter of every year. It's a seasonal change, right? So that's nothing to be shocked about. We have more inventory. Each year it goes up. You can see each year, the last few years have gone up in inventory except for right here, which was 2020. Inventory started going down because everybody hopped in the market. All the iBuyers hopped in, all the investors hopped in, and tons of people purchased until values flattened, but values were hyper appreciating at that time. So now we have inventory creeping up. It is going up week over week, but I just think it's really super interesting. Just begun. This is just the last couple of weeks of inventory. So we've just begun, but typically when more inventory comes on the market, home prices soften. So this is something to really watch. Now they did this back at the end of last year, but then there was a huge spike in January, even with the continuing increases in the interest rates. The Fed was increasing. So we'll have to see what happens. The Fed's keeping the interest rates high. Will we still get another spike in January of home buyers jumping in again? And will people that are investing in real estate, as for rentals, wholesaling, for fix and flip, will that continue to be high? So this is a thing that we'll really have to watch, is increasing in inventory, unemployment increases. We do show that debt is high. There are a lot of articles showing that debt is high. We've already gone over a previous video a couple of months ago that showed that HELOCs are increasing. So it's time to really watch, especially if you hear extreme highs, like I showed you, extreme optimism versus extreme pessimism. You don't have to be in either camp. You can look at all the data, analyze everything, and that's a smart thing to do, especially if you're a real estate investor. If you're a homeowner, you're going to be in that home for at least 5 to 10 years. So they're still going to buy a home, and you've got the sellers that can still sell to those people, right? So you can still have those sellers that need to move. But for a quick fix and flip, or trying to make a quick buck as an investor, or get a renter in there and not be concerned about rents going down, this is a time when speculative investors should be cautious and should look at all the data and pay attention to market signs like that. Don't be like these people that were saying, there's nothing to see here, and we're caught off guard buying property still in 2008, even as things were flattening out and then started to decline. It can impact everything. No one has a crystal ball, and markets go up and down, even if they're going up over decades. There is more rentals available right now. There's more competing rentals. So that means that the rents are going to soften. So that your numbers not be what you got off of Airbnb, or there'll be more investors selling those rentals because they're not making the income. So we all face financial challenges at different times. Here's the thing: when financial pain hits long enough and hard enough, it's eventually time to act on that. So if there's absolutely nothing wrong about exploring all options, and actually that is the smartest thing to do, and you may take a little bit of loss, but is it taking a little bit of a loss and selling that house that's losing you money? Is it better to take a little loss or a large loss? After doing this for over 25 years as a real estate appraiser, I've been pessimistic about housing markets before, but only like a couple. Seriously, only a couple. And that was the late 1980s and the early 2000s, when I was able to help a lot of people. However, I did have to endure selling, and I cut losses before they became higher. We sold a house we were building. Like I said, we were building a new house, and to sell it, we lost our deposit. But what's a loss of like $10,000 versus we would have lost $100,000? It went down in value, 100,000. I'm not saying prices are going to go down that far. I'm just saying that it's better to err on the side of being cautious than speculating and estimating that things are going to continue to hyperinflate. People that lived in their homes and worked, they were fine. They just hung in there until the recovery happened. But it was the wholesalers, it was the flippers, it was the rental investors. They went through some very painful years of costly losses from not analyzing the pessimistic data of micro and macroeconomics. So foreclosure can put a big shadow over people's entire financial stability, and it limits future investments that could bring better returns. So if you're a real estate investor, move with caution right now and consult with a professional who can analyze the deal and make sure you're covered. Because in the end, it's really about coming out the other side financially stronger. And our goal is to eliminate stress in that process of buying and selling homes. So if you're in the market to buy and sell anywhere in the US, we have vetted real estate agents. So just call, text, or email, because for over 30 years, we've loved helping homeowners with excellence through experience. We'll see you next time.